do on Wall Street bets. All right, let me set this up real quick. Desktop.
Hey, how's it going?
Hey, what's up, Denver? How's it going, bro?
Good, good. So yeah, I just got your indicator, and I was just wondering, for marking up a US 30 chart. I usually use support and resistance. So like, I know how you use the indicator on the 10-minute, but I'm just wondering if you mark up the US 30 charts with support and resistance use a market structure as well.
So me personally, I only trade during the New York session. So the thing with the with trading US 30 and like other indices during their normal session is that most of the time they don't respect market structure because it's basically news based. So if something happens like some COVID news that's beneficial to the US 30 market, it'll like spike it right up and it'll shoot right through the structure. So most of the time I don't really use it for structure with that regard, in comparing it to Forex. I usually use it mostly for like rejection. So I'll do something like this where I will, I'll follow like this trade right here. So I'll follow like, I'll see the sell signal, right?
Yeah.
And then basically what I'll do is I'll see where the structure is, where price is rejecting from. So I'll do that. I'll turn off the K2SR indicator and I'll see, oh, there's a nice rejection here, right? So it's a rejection followed by momentum swing downward. So if I see this, I would probably enter a short position, and then I would probably ride this down. So if I turn the indicator back on, it'll show structures down here, right? So if you're following this this structure from here, where you see this, opposite rejection, then you probably wouldn't take this trade because you're like, oh, it's at a
support.
Support. So I probably wouldn't take this because it's too risky, right?
Yeah.
But since this is during London session where there's a lot of volatility, if you were to take this trade, it would, let's see if it goes, it shoots right through it. You see how it shoots right through it?
Yeah.
So me personally, I don't use it for that specific reason. I use it to identify rejection points, like where it came from before the momentum happened, versus using it as an area where like not to trade, how I use it for Forex. Because for Forex, I don't know if you've seen how I've analyzed it. I usually avoid those zones and I don't trade when it gets near it because Forex moves a little different where it just goes back and forth. It's a ranging asset.
Yeah.
In comparison to like indices, because indices, they're mostly like news based. So if like something happens regarding one of the stocks that are within the US 30 index, then it'll spike price regardless as to whether there's a structure there or not. So I don't know if that answers your question, but that's how I use it. Yeah.
Okay. And so I noticed in the academy, you only do it right after opening. So at whatever your time zone is. So do you do it like a minute after the opening or do you do it right before? What time do you type in your positions?
I do it the candle following the opening. So for me, the New York Stock Exchange opens at 6:30 a.m. my time. So basically the way I do it is I could just like mark up all of the 6:30 marks right there. Like that's from today. This was from the previous day over here. Actually, that was a weekend. So this was from like the previous day over here. So basically, I'll just put like these vertical lines at like 6:30. That's when the New York Stock Exchange opens my time. I'm not sure where you're located. Are you located in California or are you located?
Canada. So it's like 10:30 my time.
Oh, okay. So you're 4 hours difference.
Yeah.
Or 3 hours, right?
4 hours. Yeah. If you're
4 hours. Okay. So yeah, for you, it would be 10:30. So basically after 10:30 your time, which would be 6:30 my time, that's where you would start looking for entry. So like say for like this trade right here, for this one, this is 6:30. We take the one following it. Cause I know there's some confusion where people think that you're supposed to take the one that's on the opening candle. But the reason why I avoid that is because if you understand how the stock market works, there's a lot of these after our orders that are getting put in. And then as soon as the market opens, all those orders flood in and it causes manipulation in price. Like it spikes up or it spikes down. And you don't want to get caught on the wrong side because sometimes it'll spike up and then it'll correct right back down.
Yeah, that's right. So you only do it 10 minutes after on the second candle, right?
That is correct. So I start looking for it after 6:40. So 6:30 is when the market opens. I let that candle close and I let, price stabilize to doing whatever it's doing. And then I take that next entry following that. So like for this situation right here, I was trying to find like an entry where the signal came on the candle because it happens a lot actually.
Yeah.
And a lot of people are so tempted to take it. Actually, it happened today. So it happened today on the entry. If we took that entry, it would have, obviously would have hit TP. But, we didn't take it because I figured this to be some sort of manipulated move because if you followed it after the open, it looked like it possibly could have, rejected back down, obviously, because right here, if we had the structure lined up here, we would have seen that there's a rejection here. And then this would have kind of hinted that price was probably going to come down. So that's why I wouldn't have taken this specific signal right here. But some people do. I mean, you can, but from my back test, I back tested US 30 like maybe 5 to 10 years back. And I have I documented like every type of entry. I documented the entries on the market open. I documented entries like an hour before, like when the actual US market opens at 5:30. And then I found that after 6:30, yielded the best results. So that's why I stuck to that because, obviously I want the higher win percentage because, if you're trading once a day, like the US 30 trade, it's once a day, it's going to be a numbers game. You have to have above like at least a 60% win rate to, be profitable at the end of the year. So I back tested 5-10 years. And then after that time, I think it was above an 80% win rate, like after 6:30. So I was like, I'm going to stick with this. It works, obviously.
Okay. Awesome. And so you always enter at the 6:40. So say there was an alert that has a green alert, but a bearish candle comes on the green. Will you just wait for the next opportunity?
Exactly. Yeah. Okay. Because that would be considered an invalid signal. Cause you can see here sometimes where it's like, you get like a buy signal and then it's actually a red bearish candle. And then it ends up going the opposite direction. The reason for that is because sometimes, like, I'm not sure if you're familiar with like options. Do you trade options at all?
No, not options. No.
Okay, so basically in the options market, because a lot of people don't realize that all of these markets kind of intertwine. Like there's a directional spot market where people trade up and down. There's an option market where people have like strike prices somewhere. Like they'll have like areas here where you have to like cross certain points. So like right here, this is like an example of like how this price would have like screwed up this right here, because sometimes if you're trading an option, you're basically betting that price is going to be either below or above the strike price. So what happened with this was, this happens all the time in the option market. Like if you hold it to expiration, price will come down below there. Like how you can see right here. If I rewind this and you look really closely, you'll see that it'll be like a strong bearish candle. So it's a strong bearish candle, but it closes with a green bullish candle, because what happens is it'll be down there until like the last 10 seconds. And then the last 10 seconds, it spikes right up. And then everyone who made an option bet that, it's going to be below it and ends up losing, So
Yeah.
like that's another thing to take into consideration, because I've traded all types of markets. So I understand, why these like weird movements happen in the market, because most of the time this has to do with like an option strike price, because generally the option strike prices are about at round numbers. So this is like 30,050. So I'm sure that this was a strike price where people were betting price was going to be below, and it got really close. And then at the last second, it spiked up, and then and then everyone pretty much lost their money who bet that it was going to go below there.
Okay, I see.
Yeah.
Okay, awesome. Yeah, well, that's about it. The Academy explained everything well, and you always do the 150 pip stop loss and take profits, right?
Yeah, that's what I usually do for my back test. I figured that to be the sweet spot, because the way that I back tested it was I basically went through, and I like generally where my stop loss is at the previous swing. So like if we were to take, let me see if I can find an entry here that we can possibly look at. Let's see, 6:30 a.m., which was right here. Yeah, so basically right here, generally I would put my stop loss at like the previous swing, but obviously this would just be way too close to only 300, 400 pips. So for my back test, I pretty much got all of the stop loss, put them together, and then I put an average out. So I figured out what was the average number where price would get close to the stop loss, but then it would, swing right back into profit. And then 1500 was a sweet spot. So that's why I've set it at 1500 pretty much for every trade. Because if you look at, pretty much all of the sessions, like if you try to map out all of the US sessions and then you try to measure like how much movement happens between the session, it's generally going to be around 1500 to 2000 pips. So that's why it's a sweet spot, because we try to get in and out of the trade within the New York session. And if you have it more than 15,000 pips or 1500 pips or more than 2000 pips, odds are you're probably gonna be stuck in that position into, the following session. So the 1500 is a sweet spot from the data that I pulled.
Okay, awesome. Perfect. No, that sounds good. Yeah, I'm excited to test this out.
Yeah, dude, definitely. It was. Did you just join like recently, or were you with us last week?
Just this morning, I came across a YouTube video and then I bought it while you were on the call.
Oh man, you missed out. Like last week was like, well, I mean, this whole year's been fire, dude. I don't know if you saw the results, but like last week was like back to back, like literally Monday through Friday. It was just full 1500 pip wins every single day. So I was like wondering like if you took advantage of that, because so many people took advantage of that and we made so much profit last week. So like today was kind of a bummer because everyone was like waiting for that trade, and it never came.
Oh, it just never came. Okay.
Yeah, because the thing is, like I mentioned, that the session, we try to get in and out within the U.S. session. So the thing with this trade right here is that we had the open at 6:30, and generally, if the trade comes after 10 o'clock my time, which is about, I guess, 4 hours after open, basically market volatility dies down like substantially. So like right here, you can see it hit 10 o'clock, and then our signal came over here at like 11:40. And then the market closed like less than an hour later. So that's why we didn't take this trade, because we don't want to get stuck in market swap where the spread gets all crazy. And then basically when price goes from session to session, it usually goes in the opposite direction. So it'll go like from this open here, it would go from here up to here, and then it ends up reversing slightly during lunchtime. And then from there, it'll either reverse back to the other direction or continue farther down. So it looks like it's going to continue down from here. So that's why we don't like to hold US 30 trades into, further sessions.
Okay. Okay. Perfect. So, but by the looks of it, it did caught the buy today, right? Because
Yeah, exactly. So the thing with this trade right here, I wasn't expecting this breakout to happen like that, because I was waiting for a buy. Like in the morning, because I did identify this rejection right here. So like say before the market opened right here, what I did was I was looking at the rejection point. So I saw this rejection point down here on the higher time frame. I think it was a 30-minute or the 1 hour.
Okay.
Yeah. So I saw this huge rejection point right here. I was like, okay, this is a big rejection point. So I was like, this is going to be a big move upwards. So what happened was I was waiting for that signal. I was hoping that it wasn't going to come on the open of the candle. I was hoping it was going to come on the next
one. Okay.
Trade. Exactly. So it happened right here, and I was like, shit, why did it happen right there? Because normally we'll have this bullish move but it won't close with the signal intact. It'll just close as a strong bullish candle. And then the next one will push up a little further, and then it'll have the signal right there. So if
Oh,
that
I
was to
see.
happen,
Okay, so
yeah,
that's
it would
what
have,
usually happens. Okay, okay.
yeah, yeah, exactly.
Yeah,
That's what normally happens. And then what happened here was this was such a strong candle. Like this candle was about 1,000 pips. It was a
yeah.
thousand pips. So generally, when this happens, what happens is price usually pulls back a little bit, because it fills that little gap, because it's like this is such a huge movement that it needs to retrace a little bit. So it usually retraces a little bit. Sometimes we get a false sell signal, like a red sell signal with a green bullish candle, like we did right here. So
Yep.
this happens sometimes right here, and then it's followed by another bullish candle. So if we have another bullish signal right here, that's where we could have entered that buy position. But the thing is, it just kept pushing up. I was like freaking out. I was like, man, this thing just keeps pushing up. Because you can see right here from these other candles that possibly these could have maybe given like some sort of false signal, because it was pushing bullish, but then it closed red. So I was hoping it, closed red, and then maybe on this one right here would probably close in the other direction. Because sometimes that'll happen. You'll see like some false signals followed by a valid signal, and close with like another valid signal following it. So then we could have had another entry there. But just because of the market conditions lately, I've just been a little more careful, because it's just, I don't know if you're familiar with like all the COVID news that's been happening, but it's very conflicting, because the vaccine news will obviously affect it in one way, and then the stimulus news affects it the opposite way. So they, like, the Congress is talking about stimulus, the other country is getting vaccine, and then the news kind of clashes. So it's like there's no really set direction. Plus, it was getting near an all-time high right here. So
Yeah, that's right. Yeah.
so that's why I was like, shit, I don't want to take a buy, because once it gets to this point, it's probably going to tank at some point,
Exactly. Yeah, that's true.
which is probably what's going to happen here. I think tomorrow, hopefully it doesn't move too much. I'm hoping it just goes sideways right here.
Mm-hmm.
And then hopefully tomorrow morning, it'll come up, test this area. Yeah, test this area, get a sell signal, and then we can write it down. Kind of similar to what happened here. You can see it tested this zone. We got that sell signal right there, and then you could have literally rode this down for like a huge move.
Yeah, no, for sure. So do you normally keep like the profit runners? Like, do you keep them going, or do you usually cash it out 100 or 1,500 pips? 150?
So what I do sometimes is, so say if we have this here, this entry, and then we have 150 pips, right? So basically what I do is, once we get close to this, like say if I see price coming down like really close, and say it's like a smooth drop like this, like no drawdown at all, zero drawdown, what I do is I'll remove my profit target. And then from there, I just move my stop loss along with it. So as it continues to move down, I just slide my profit, my stop loss farther and farther down, so that when it does, pull back, because it's eventually going to pull back, I get stopped out in more profit right here. So instead of getting 1,500 pips, I actually lock in, maybe 1,800 pips, and I add another 300 pips to there.
That's still crazy. Good move doing that every day. That's a mass amount of pips compared to the Forex.
Yeah, exactly.
Yeah.
Oh yeah, definitely. That's why I only do this. So I do this once a day, and I do Forex on the 4 hours, so that those are like, just floating profits basically throughout the week. But then my US 30 is like last week, dude, we made a killing last week. I don't know if you saw all of the results from like.
Yeah, I didn't see them. No.
Yeah, so I saved everyone's results, and these aren't even my results. These are like other people. Like, I don't know if you saw C-Stoop in the group. He scalps a lot. So today he made like 600. He's literally just scalping the background. He's watching the live, but then scalping back there without saying anything. So he's there scalping, and then these are like everyone else's profits. Like Nicole, one of the girls there, she made like 2,000. Alakin, he made like 1,200. Tam, she made like 300, and all these people are in the premium. So like now that you're in the premium, you can connect with everybody, and you'll see like who's active and who's not. Because you'll see the people that always post their profits, they're pretty much just taking the same trades that I call.
Okay, awesome. So do you do YouTube live every day?
Yeah, so I YouTube live every Monday through Thursday, sometimes on Friday if I think the market's good. Generally, I don't like to trade on Friday, because the market's just weird. Sometimes it'll just be spiking around both directions. So I generally don't like to trade on Friday, because there's a lot of manipulation on with people exiting the market, midday for the weekend and stuff like that. So usually I'm not on Fridays, but sometimes I'm on. Like last week I was on because we had such a good week and it was NFP. So I was like, I'm gonna hop on, and then we ended up taking the trade, and thankfully it hit CP, so it all worked out for us.
Awesome. Yeah, well, I appreciate the time, Shawn, and yeah, I'm excited.
Yeah, definitely, dude. If you have any other questions, feel free to reach out. I'm always here to help. And like, if there's anything that confuses you, or if you end up hitting like stop loss and you don't understand like why you hit stop loss, like just a reminder, there's always a solution to like every problem. A lot of people don't realize that with Forex, or not even just Forex, just trading in general. There's a lot of things you can do to troubleshoot to understand, why stop losses are being hit. And it's an easy fix usually, but a lot of people don't realize that.
Of course. Yeah, 100%.
Yeah, definitely.
Yeah,
All right, man.
I will see you on the YouTube call tomorrow morning then.
Yeah, definitely, dude. So I'll see you tomorrow morning.
Awesome. Thanks again. Okay. See ya.
All right, bro. See you later.